No disco today. Just some fast videos to reinforce some ideas of studying behavioral finance, technical analysis, and how you can predict, not accurately, but with some accuracy, future moves. And you don't depend on financial channels or big boys or whoever. Just depend on yourself. You try to formulate your strategies, try to make sense of them, because you really have to depend on yourself. No one's gonna help you. So if you follow me on Twitter, over the 3-4 people that are following me, you're gonna see that I start pointing out there is some call a bearish candle formation, like 3 days, called the bearish advance block. It's like that. So I mentioned that with this chart. So you have a Fibonacci trend line right here. So no one can tell me they cannot read or they cannot see. So you could pause and see the whole picture first. Then I get it closer. So this is the Fibonacci trend lines, and see how accurate it is. It's based on Fibonacci numbers. So you have 3 trend lines based on 38%, 50%, 62% differences between the spaces. Okay, so I pointed out that there is a bearish candle formation that came with the Bollinger Band, because if you close inside of the Bollinger Band, that means the standard deviation is still working. So you found sellers at the Bollinger Band that came with the upper end of the trend line, the Fibonacci trend line. So with that, you have bearish candle formation, seller's zone. So you have to take profits. So you don't just stay complacent. And I mentioned that the stochastic number, is usually not sustainable, even though momentum, if it's at 98, that's beautiful for the market. That means the momentum is strong. But I was arguing, so at that time there's no bearish signals. At that time, I was arguing about the duration. First, how many times it reached that number the last 6 months, and the sustainability of that move. And I proved it in a video. So one, the Fibonacci trend line, Bollinger Band, and the bearish advance block for the candles. So you could predict, you could try to predict, and after that you have a bearish Harami, and after that a confirmation for the bearish Harami. So it's clear. So no disciplined technician would stay in a long trade here. In this area, no one. So if the market crashes and a technician claims that that technician was all cash, and no one believed them, it's your problem, because that technician is following these procedures. So in the Japanese candles, it tells you watch out, and watch out, and watch out. In the Western technical analysis, it tells you watch out, watch out, watch out. In the alternative Elliott wave theory, it tells you to also watch out, with this count. Tells you that, as I said before, 1, big 2. Some people call it 5 now. So okay, they aligned Dow with the Nasdaq, but I still call it 2. So it tells you 1, 2, and watch out for 3. So no one could claim that technician is lying, because that there's some procedures, some people telling that technician, some form of technical analysis school of thought tells him to go to tells him or her to be cash. So, okay, and also in the volume analysis tells that technician to be careful with the high volume. in the down days. Also, which I think I've never heard that before, so I learned this throughout the years using the option market, the put to call, that total equity, to solely predict the market. You can watch the video I posted last night or yesterday. In that video, I claimed this is my signal. It starts with a positive, even though there's a misspelling here. Sorry about that. Divergence between the price action, which is the actual put to call. You have an equal low, and the stochastic you have higher and low. So this is rule number one. This is rule number two. Rule number one, you have to have the 20 over the 50 in the bullish crossover, the moving averages. So rule number two is this. Rule number three, once you have these sudden moves, up, violent move, that tells you the sentiment is changing. So you had a 20% change of sentiment yesterday. And then you have the stochastic coming out of oversold over 20, which induces this MACD crossover and produces that bearish move. As you see here, and you see here, as you see here, it's really weird how repetitive it is. So if you follow these structural studies or ways, and someone call you a liar, tell them it's okay, I'm a liar. Stay, just look at the fundamental ratios, follow the big boys, and just stay there. It's okay, it's up to you. Please, guys, if you like the video, subscribe, share. I would like it to share, please. I would like it to like, please. Help me grow this channel. Some of you think that I deserve more followers. If you believe that, please share. I love you guys, and this goes forever.